Hello, good evening, everyone. So, as you all know, the latest past paper, that is of October November 2024, has been uploaded. So, I thought of solving an IGCSE accounting past paper. If you all can see the subject code as well as the component code, that is 0452, and the component code is 11. So, let's quickly begin solving it. So, here's the first question. What is the purpose of measuring business profit and loss? A. To check the productivity of employees. Okay. To consider the ability of the business to grow. Alright. To determine how much cash is available. And the last option, to ensure that the inventory is not overstated. Alright. So as you all know that we calculate profit and loss through income statement, right? So cash is never a part of that income statement, because cash we record it in a financial position. So C wouldn't be the correct option. So I'm just eliminating it. D1, again, to ensure that the inventory is not overstated. Again, we don't measure our profit and loss to calculate the inventory valuation. So again, D is eliminated. Uh, A, to check the productivity of employees. So I don't think we calculate profit and loss to measure the productivity. So again, A is not the correct option. So the right option for question number A would be B, because we consider to consider the ability of the business to grow. That's the reason we measure. One of the reason to we measure our profit. Moving ahead to the second question, that is, at the end of the first year of trading, Zoe had $6,500 in a business bank account. Then she paid $5,000 of her own money into the business bank account. She used $2,000 of this amount to repay a business loan. Okay, what effect would this transaction have on her assets, capital, and liability? All right, again a simple question. Let's understand. So she had a closing bank balance of $6,500. So I'll write this down somewhere. $6,500 is her closing balance. Now she paid 5,000 of her money into the business bank account. So can't we say that this 5,000 is nothing but an introduction of capital? So 5,000, there by 5,000 there was an introduction of capital in a account. Now from this bank account, she used 2,000 of this amount to repay a business loan. Now, business loan is nothing but a liability. So if I'm repaying a liability, that means my liabilities would be reduced by $2,000. So liabilities would be reduced by how much? $2,000. So I can only see in option number B, liabilities being reduced by 2,000. So somewhere down the line, I don't even have to check the other options. So, but let's also calculate the other things, that is capital. So if you can see over here, 5,000, as I said, was introduced in the business bank account. So can't so that means that 5,000 was introduced as a capital. So that's why there is an addition of 5,000. Now in a asset, already there was 6,500. By the way, bank we recorded under current asset. So that's the reason. Let's also see the effects or what happened to the asset wala part. So there was an introduction of 5,000 in her bank account. So this got increased, but at the same time we reduced how much? We reduced 2,000 to pay. So if you can see, the net effect between these two was there was an increase by $3,000. So that's the reason B is the correct option. All right. Let's now move ahead with the next question, that is, which business document is used by a trader to record amounts deposited into the business bank account? Now, again, this question is related to business document. So we are on the second section. So again, an easy question. Business document, you all should know what are the business documents. So one of the business document over here we are using it to record the amounts which are deposited in the bank account. So bank statement, no, bank statement is not a business document, so this is eliminated. Check counterfoil, yes, counterfoil is one of the business document which we use to record business, the whatever deposit we did in a bank account. Next, paying in slip. Again, paying in slip is not a business document at all, so we just eliminated. The last option, statement of account. Yes, this is a business document, but we don't use this to record or to record the amounts. So again, this is eliminated. So in this case, the right option would be option number B, because we use the check counterfoil, the counterfoil to record, to record a business transactions. So B is the most appropriate and right answer. Let's now move ahead with the fourth question. This question is again from petty cash book. All right. So a trader kept a petty cash book using the Impress system. He provided the following information. 1st March, petty cash balance 80. Transfer from bank account to restore the impressed. Alright, 170. Petty cash payments, these are the payments, expenses, and petty cash expenses refunded. So, refunded by $10. Alright, so before moving ahead with the question, let's see how much was needed to restore the impressed on 1st April. Alright, so they are asking us how much was the amount by which we need to restore the impressed. So by the way, what is impressed? Impressed is nothing but the amount which is required for a petty cashier to start the following month. So over here, one simple trick I would say, the amount restored would be nothing but the amount which was actually spent. Okay, the net amount which was actually spent. So let's understand this. Before that, let's understand what is the impressed amount which was needed. So if you all can see, my petty cash balance was already 80 and they transferred from their bank account, that is 170. So I'll come to know that the restore amount which is required, the impressed amount which is needed was 250. Okay, so every month the petty cashier has to make sure that they have 250 for to start the month off. Now from this, the petty cashier spent 195, all right, and he received 10. So the net expense which was actually spent was $185. All right, so they had 250, they spent 185. What's the question? How much amount was needed to restore? So as I said, the amount spent would be the amount which is required to restore. So hence I can see 185 over here. So C is the correct option. Alright class. Now moving ahead with the fifth option. Fifth question. Sahil took goods from the business of his own use. This goods costed $60 and a selling price of $100. Okay, which entry was made in the drawings account to record this withdrawals of good? All right, so easy question again. Always understand, whenever we need to record the drawings amount, how much did he withdraw, so that is nothing but sale price or the cost price, whichever is low. So in this case, the selling price is how much? $100, and the cost price is how much? $60. So obviously 60 would be the right answer. Drawings, we always debit it, so that's the reason 60 debit would be the right answer. Okay, now moving ahead with the sixth question. What is an advantage of using a sales journal? So sales journal, understand, it enables the monthly totals to be posted to the sales ledger. Okay. So again, this is a part of your All right. Again, now understand this thing. This question is uh, the advantage of using a sales journal. Sales journal. It's talking about books of prime entry. Prime entry mein one of the books is sales journal. So you all should know the difference between sales journal, sales ledger, and sales account. So here we don't use sales journal to post to the sales ledger. No, we use sales journal ka balance to post it to the sales account. So hence A won't be the right answer. It ensures that all credit sales are correctly recorded. No, this is again there is no what I can say 100% assurity that all credit sales have been recorded. Third, it reduces the number of entries in the sales account. Yes, this is the right answer. Let's also see the fourth option. It shows the amount owed by credit customers at the end. No. Again, this is not the right answer over here. So the right option would be C. It reduces the number of entries in the sales account because we record in sales journal, we calculate the total and we put it in a sales account. In sales account, we will have credit sales as well as the cash sales. So the number of transactions or recordings would be reduced. So that's why C is the right answer. Let's move ahead with the seventh question. The following account appeared in the ledger of Ellie, that is Jacob account. Okay, now the question is which statement is correct? Okay, now understand over here, uh, we have to think from Ellie's point of view. First of all, understand who would be Jacob. Jacob would be a trade receivable because I can see sales over here. So there is Jacob is nothing but he is a trade receivable for us. Now the first thing, on 1st June, Ellie was owed 220 by Jacob. Okay, Ellie was owed $220 by Jacob. Okay, 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 that's correct. That's correct because you can see over here there is an opening balance of 220 in Jacob's account. So this is the appropriate answer I would say. Let's see also. Let's discuss the other one. On 4th June, Ellie paid Jacob 210 by check. 4th June, Ellie paid Jacob. No, it is Jacob paid Ellie. So that's why B won't be the right answer. C option, on 22nd June, Jacob sold goods to Ellie. No, it is Ellie who is selling goods to Jacob. Jacob is a trade receivable. Ellie is selling goods to Jacob. So again, C won't be the right answer. The last option, on 30th June, Jacob was owed 400 by Ellie. Again over here, Jacob was not owed. Jacob owed to Ellie. So again there is a nice word play. So again D is not the right answer. So the correct option would be option number A. Now let's move ahead with the next question, that is question number 8. The totals of trial balance agreed, but it was found that the purchase of office equipment has been debited to office expenses. So again, here if you can see, one is capital expenditure and other one is revenue expenditure. So if you can see, whenever we are mismatching this one, it becomes error of principle. So hence D is the right answer. Moving ahead with the ninth question, Mandy's trial balance failed to agree. The difference of $620 was placed in a suspense account. Okay, the suspense account's balance was shown on the debit side of the trial balance. Which error has caused the difference? If you can see over here, the suspense account, let's just do a rough suspense account. So this is my suspense account. So they are saying $620 was placed on the debit side. So somewhere we started our suspense account by balance brought down recording on the debit side. So that means our credit side was greater by 620. Somewhere due to this error, a credit side was increased by $620. So let's see which errors made a credit side to increase by 620. So the first option, that is discounts allowed of $310 has been credited to discount received account. All right. So always remember, this type of errors has you need to double the amount, because you need to record it on the debit side, but by mistakenly you record it on the credit side. So that means when you are reversing it, you need to multiply it by 2. So yes, this could be a reason, because you recorded over here. So this could be a reason for an increase in the credit side by 620. Okay, next option, discount received of 310 has been credited to discount allowed account. Okay, discount received, so you need to credit it, but you record it in the debit side. Again, if you are recording in your debit side, your debit side will increase by 620, not the credit side. So again, B is not the right answer. C option, the value of closing inventory has been overstated by 620. Closing inventory, no, this is closing inventory. Always remember one thing, closing inventories never affect your trial balance, because closing inventories are the information on closing inventory is given in additional information. So this never affects your trial balance. So C and D is to absolutely eliminated. That's the reason closing inventories has two effects, because they are prepared after the trial balance is prepared. So somewhere the right answer is obviously the option number A. All right, so A is the right option. Let's move ahead with the D1. Jane took cash drawings from the business. The amount was debited to the purchase account and credited to the cash account. So if Jane is taking cash drawing, so drawing account debit, okay, the amount was debited to the purchase account and credited to the cash account. So somewhere incorrectly she debited purchase account. So understand this transaction over here. The entry should be, the correct entry should be drawings account debit to cash account credit, whatever is the amount. But mistakenly she instead of debiting drawings, she debited purchase account. She debited purchase account debit to cash account credit. So if you can see, if I'm debiting purchase account, so purchase is nothing but my expense. So somewhere if your expense is increasing, your profits will decrease. So profit is going to decrease. And current asset, the correct entry was drawings to cash. So cash anyways has to be credited, and she credited anyways. So my current assets won't be affected. So the right option would be option number A. Alright. Now moving ahead with the next question. What is true about a bank statement? Bank statement is nothing but my passbook. It is a demand by the bank for the repayment of an overdraft. No. Next one is, it shows positive bank balance as a debit balance. Okay. It shows positive bank balance as a debit balance. No. In bank statement, if you are having a debit balance, that means you are having an overdraft balance. So again, 1 and 2 is eliminated. It shows transaction affecting the bank account in a given period. Yes, that is the correct option. So D would be the right answer. Alright, let's move ahead with the next question, that is question number 12. On 30th June, the bank column in Farad's cash book showed an overdrawn balance of dollar 2000. The following items had not been entered in the cash book. Okay, not been entered in the cash book. Okay, what was the correct balance of the bank column in the cash book? All right, so basically this was an incorrect balance or balance before the errors have been recorded. So we have to just take this balance. Always remember, now cash book has an overdrawn balance. So overdrawn matlab there is an what I can say, overdraft balance. So your bank balance was 2000 negative. Now in this items you need to add or subtract. So let's see. First is sorry, standing order for rent. So standing order means nothing but 200 has been directly deducted from your bank account. So that means you will further minus this 200. Interest on bank overdraft. You already had an overdraft of 2000. Again, you have to pay an interest. So further, this will reduce your bank balance. So again, you will have to minus this 50. The last transaction is credit transfer from X Limited. So someone transferred in your account, that is dollar 2900. So 2900 will you need to add over here. So if you add and subtract all of them, so 2000 minus 2000 minus 200, so this will give you 2250. 2250 negative plus 2900 will give you positive 650. So the question is what was the correct balance of the bank column in the cash book? So as of now we are having a positive 650. So always remember, bank column has a debit balance. So that's the reason 650 debit would be the right answer. Alright, if this 650 would be negative, in that case your 650 would be written on the credit side of the bank column. So in that case A would be the right answer. But the question is about, the correct answer would be B, because 650 we are getting debit balance. Alright, let's move ahead with the next question, that is I'll just remove all this thing. What is an advantage of maintaining a purchase ledger control account? Again, this is nothing but totals of trade payables. So purchase ledger deals with your trade payables. All the trade payables you will summarize, you will record in your purchase ledger. So what's the advantage? It detects errors of omission. Oh no, this is not the right answer. It guarantees the accuracy. Again, it doesn't guarantees. It prevent frauds. Okay, that. Let's also see the next option. It shows how much is owed to suppliers. Okay, so the main motive of preparing purchase ledger control account is nothing but you can understand how much is the total of your supplier whom you have to pay. So that's the reason D is the most appropriate answer. So D is the correct answer in this question. Alright, Raj is both a customer of and a supplier to Balbir. Alright class, let's continue with the 14th question. Raj is both a customer of and a supplier to Balbir. Raj account in Balbir sales ledger showed a debit balance. Okay, so Raj account in Balbir sales ledger. So I have written over here showed a debit balance. So debit balance, so I'm just writing on the debit side, that is 300. There was a credit balance of 100 on Raj account in Balbir's purchase ledger. So Raj account in Balbir's purchase ledger. So it's nothing but it's having a credit balance. So in this case, in purchase ledger we record all our credit purchases, whereas in sales ledger we record all our credit sales. So this is how their opening balance is shown over here. This is nothing but this is my balance brought down, balance brought down. Now a contra entry between them has been agreed. Which entry would Balbir make in the purchase ledger account? So basically they are asking about this account. So always one thing you all understand over here, contra entry is nothing but it's a set of between the both the entries, that is sales ledger as well as purchase ledger, and taking into consideration the lowest amount. So basically I'll explain you the journal entry. So in order to record the journal entry, it's like sales ledger always have a debit balance but purchase ledger has a credit balance. So in order to set off, we debit our purchase ledger over here. Purchase ledger account would be debited and my sales ledger account would be credited. Alright, and the amount which would be used over here would be always the lowest amount. So lowest among 300 and 100 is 100. So I'll be using 100 in order to do set off. I'll explain you the logic behind this. See now what is the scene over here? For Balbir, Raj is in this case in sales ledger, Raj has to pay Balbir 300, whereas Balbir has to pay Raj 100. So in order to do a set off, that means if 100 is being subtracted amongst both of them, the remaining 200 Raj will pay Balbir. So that's the reason the lowest amount needs to be set off. So the question over here is, which entry would Balbir make in his purchase ledger control account? So if you all can see my journal entry over here. So purchase ledger has been given a debit entry of $100. So I'll have to record over here 100 as sales ledger account. So this is nothing but my contra entry. So the right option would be option number C in this case. Alright class, any doubt? If the same question they would have asked, instead of purchase ledger, they would have said which entry would Balbir make in sales ledger. So in that case, A would be the right answer, because in that case I'll have to reduce Raj account by 100. So that's the reason this account has to be credited. Alright, so let's move ahead with the next question. So in this case I'll rub off the option number A and I'll rub minus. Okay, so in this case the correct answer would be option number C. Okay, now let's move ahead with the next question, that is question number 15. A limited company sells of office equipment. The following amount were recorded in the company's books of account, that is cash received from disposal of motor vehicle 6,000, cash received from issue of shares 9,000, discount received 8,000, rent received 5,000. What was the total of the capital receipt of the company? Nice and interesting question. Again an easy question, I would say. They are just asking about the capital receipt. So receipt is nothing but the earnings which the business has done, which is not on a ongoing basis. It's like once in a while. Okay, so what would be those kind of receipt? So first one is capital received from disposal of non-current motor vehicle. Yes, this I don't earn on a regular basis, so this has to be capitalized. Second is cash received from issue of shares. Yes, this also I don't issue it on a regular basis, so this both of them has to be capitalized. Third is discount received. Discount received is a revenue received, so I don't have to include it. Rent received, again rent received is every month, so I don't have to include this. So the right answer would be 6,000 plus 9,000. So this will give me a total of 15,000. So hence C is the right answer over here. Alright, so let's move ahead with the next question. That is question number 16. On 16 January 2023, Kate paid $400 for a 2-year maintenance contract on her machine starting on that date. Okay, so we are starting on this date and she paid 400. In error, the amount was debited to the machinery account. Ayyo, okay. Kate depreciates her machinery at the rate of 20% per annum. Okay. What effect did the error have on Kate's profit for the year ended 31st December 2023? Interesting question. Again, this question is from other receivables and prepaid other receivables and payments. So again, in this question, instead of recording as a revenue expenditure, she recorded as a capital expenditure. And because of this expenditure, what effect did it have on the profits? So let's see this question. Now she is paying 400, okay, on first Jan, but she is paying this 400 for 2 years. So I need to calculate the 1 year expenditure. So just divided by 2 year. So I will get it as 200. Okay. Now instead of recording it as an expense, she included it in her machinery account. So somewhere down the line, the machinery account or whatever the non-current asset was I would say overstated by $400. Now because of this mistake, the depreciation also would have been overstated for that year. So we calculate depreciation at the rate of 20%. So if you calculate this is nothing but it comes to $80. So my depreciation somewhere would have been overstated by $80. So I'm just showing it by this arrow. That means it's overstated. Alright. Now moving ahead. Again, let's see that instead of recording this 200, instead of recording this as a expense, she recorded it in the machinery account. So my expense column or whatever the machinery expense was understated by $200. Okay. Now my net expense. So you see, what's the question? How is it affecting my profit? So for 2023, my net expense, if you can see, my net expense was understated by 200, whereas my depreciation is also an expense that got overstated by 80. So overall my net expense got understated by 120. Okay. Now if my expense is decreased or understated by 120, what will happen to my profit? Profit will obviously be overstated. So in this option, the correct option is option number B. Again, a nice question. So I hope you all understood this question. So just we have to take into consideration the net effect. So my net expense was understated by 120, due to which my profit was overstated. So that's the reason B is the correct answer. Moving ahead with the next question. Why should a business depreciate its non-current asset? Over here, if you see, to charge the cost of an asset as an expenses in the year of purchase, okay, to ensure the cash is available to replace the non-current asset. Option number C, to ensure the value of non-current asset is not understated. Okay, to match capital expenditure against the revenue it has helped to earn. Okay, again a direct question, easy question. C. So in this case, why should a business depreciate its non-current asset? From this, to charge the cost of an asset as an expense in the year of purchase, no, we depreciate. In fact, we depreciate every year. So this is obviously eliminated. To ensure the cash is available to replace the non-current asset, again we can eliminate it directly. First of all, depreciation, because of depreciation my cash never goes. It's a non cash expenditure. So B is not at all the right option. C, to ensure the value of non-current asset is not overstated, it's not understated. If we calculate depreciation, the value is not overstated. So that could be the right answer, but it's showing not understated. So again, C is eliminated. The right answer would be obviously D, because we showed appreciation. It's because to match my capital expenditure against the revenue, it has helped to earn. So D is the right answer. A, B, C can be easily eliminated. Moving ahead, question: a trader had a credit balance in on heat and light account at the start of the financial year. What does this balance represent? Again, a question from other receivables. I mean accrued other receivables and payables. So the question is, at the start of the year, this heat and lighting had a credit balance. So credit balance is nothing but over here balance brought down. So what does this mean? So whenever credit balance, it represents an liability, current liability. Okay, and when will it has a current liability? When it is a outstanding expense. So outstanding is nothing but accrued expense. So B is the right answer. Okay. Moving ahead with the next question, which statement about irrecoverable debts are correct? They are an application of the historic cost principle. Okay, they are debts which will not be paid by the customer. All right, they increase the value of current liabilities. They increase the value of current liabilities. Okay, they reduce the total value of trade receivables. So in this case, first of all, what are irrecoverable debts? Irrecoverable debts are nothing but they are the debts which won't be recovered from your trade receivables, from your credit customers. So they are irrecoverable. So obviously they will, because of this, the total value of my trade receivables would be reduced. So 4 would be there. All right. Now moving ahead with the third option, they increase the value of current liabilities. Nothing like that. Okay, now they are a debts which will not be paid by the customers, and they are an application to the historic cost principle. Again, this is not the right option, I would say. They are a debt which is not be paid by the customers. So 2 and 4 somewhere is the right answer. So that is why D would be the right option in this case. Okay, so as I said, they are the people who are not able to pay the money, so due to any reason. So again, that's the reason the total trade receivable would be decreased. So 2 and 4 would be the right answer in this case. Moving ahead with the 20th question. At the end of the financial year, Ramindra made an adjustment for rent owed to him by a tenant. How did this affect Raminder's financial statement? Okay, they are talking about at the end of the financial year, Raminder made an adjustment for rent owed. Rent owed to him. It's nothing but I can say it as accrued income. Okay. Now always remember, accrued income is nothing but it's a current asset. So in this case, current asset will increase and profit of the year also will increase. So D is the right option in this category. All right, class. I hope you all understood why accrued income is considered as a current asset. Okay, because someone is owing to you. What's the definition of an asset? So, whatever the business owns and someone owes to the business. So accrued is income is someone owes to the business. That's the reason it is a current asset. Just understand. Remember this thing. Uh, Accrued income as well as prepaid expense will always have debit balance, and they would be recorded as a current assets under other receivables. Remember this thing. they would be recorded under current assets. And where else? Prepaid income and accrued expense would be always considered as a credit balance. The opening balance would be always on the credit side and they would be recorded under current liabilities, and in that they are recorded under other payables, whereas they are recorded under other receivables. So just remember this two things. Many questions are being asked from this chapter, very important chapters. Just remember this two things. Alright, let's move ahead with the next question now. What is the disadvantage of being a sole trader? Again, an easy question. Access to capital is restricted. Okay, that's true. Bookkeeping records are more complex. No. Decision makes take time to longer to implement. Where that's absolutely right. Sorry, it's absolutely wrong. Uh, in fact, he is a sole trader, so he can make the quickest decision ever. The liability of the owner is limited. No. So liability of the owner is unlimited because he is a sole trader. Sole trader partners, they have unlimited liability. Okay, whereas company, they have the advantage of limited liability. Why? Because it's a separate legal identity, remember. So A is the right answer. Moving ahead with the next question, that is question number 22. John and Mark are in partnership. Profits and losses are shared in the ratio 3:2. John is entitled to an annual salary of 12,000. That's okay. The profit of the year ended is 52,000. How much would be credited to partner's current account? Again, a nice question, easy question. So, what is the profit of the year is given? So, profit of the year is how much? 52,000. Okay, so always remember we have to remove whatever the interest on drawings and everything, interest on capital as well as salary. But here they have only given John's salary. So we will have to deduct John's salary, that is how much? 12,000. So if we minus this will come to 40,000. So 40,000 would be divided amongst John and Mark at the ratio of 3:2. So I'll use this part over here. 40,000 into 3 divided by 5. So this will come to how much? 24,000 for John. And for what's the other name? Mark. Mark, it is the ratio 2. So 40,000 into 2 divided by 5. So this will come to 60,000 for Mark. So the question is, and remember for John we are also giving a salary of 12,000. So 12 plus 24. So we have to also remember this 12,000. So in his John's current account there would be an addition to 36,000. So 36 and 16, that is D is the right answer. I hope you all are how it's coming. 36 is nothing but this is salary. He is getting also salary. So salary plus the regular profit share, that will come to $36,000, whereas Mark is getting 16,000. I hope this calculation is easy. Alright, let's move ahead with the next question. Which statement correctly describes the effect of a limited liability if a business fails? Again, Nice question. A shareholder can only lose the money they agree to pay for their shares. Okay, the question is limited liability. So that's true. Let's also see the other option. That is, uh, a shareholder risk losing all their personal possessions. Shareholders can only lose the capital they have invested. A shareholder, sorry, a sole trader, my bad. A sole trader can only lose the capital they have invested. A sole trader risks losing all their personal possession. Obviously, over here, shareholder risk losing all their personal possession. This is obviously wrong because it's a limited liability. He can only lose whatever amount is invested in the business. Okay, or agreed to pay. That would be right. So A is the right answer over here. C, a sole trader can only lose. So when I'm talking about a limited liability, it talks about a company. So sole trader will never come in the picture. So hence these are eliminated. So the right answer in this case is A. Question, that's question number 3. Question number 23. So here's the question. Which statement correctly describes the effect of limited liability if a business fails? So again, this is an easy question. Concept on unlimited liability and limited liability should be clear for answering this question. So the A option is, a shareholder can only lose the amount they agreed to pay for the business. All right, that's correct. Let's also see the other options. A shareholder risk losing all their personal possessions. No, that is the concept of limited liability, wherein no one can touch, or the bank people or any creditors cannot touch their personal belongings. So B is absolutely wrong. Let's eliminate it. C1, the a sole trader can only lose their capital if they have invested. A sole trader risk losing all their personal possession. C class. Now, when I talk about limited liability, I am talking about a company. So sole trader partnership firms, they are never they have unlimited liability. So whenever you see sole trader partnership, just eliminate it. Okay. So because here when I am talking about limited liability, either it could be an LLP, that's limited liability partnership, or company. So C and D is obviously eliminated. B, again it's a wrong option. So the right option is A, that is, a shareholder can only lose the money they have agreed to pay. That's the concept of limited liability. The liabilities of shareholder gets limited. No one can touch their personal belongings. So A is the right option. Moving ahead with the next question, that is question number 24. At the start of the year, we limited had $45,750 total equity, okay, of which $10,750 was retained earning. Okay. At the end of the year, the company transferred 1,000 to general reserve. All right. Paid a dividend of $2,800 and made a profit for the year $4,995. So the question is, what was the total equity at the end of the year? So the question is, they want to know the total equity after taking these things into consideration. So let's just understand this question. Again, an easy question. So at the start of the year, the retained earnings was how much? $10,750. In this, the company had a transfer 1,000 to general reserve. See, whenever I transfer to general reserve, my total equity doesn't get changed, because normally what we do, we take it from retained earnings and we put that amount to my general reserve. So anyways, it doesn't affect my total equity. So I'm not doing anything with this. Next is, paid a dividend of $2,800. So whenever I'm paying or making any dividend payment, it always reduces my retained earning. So let's subtract this 2,800 from my opening balance of retained earning, and made a profit of 4,995. So profit always increases the retained earning. So let's add this. So when I add all of them, so the total which I am getting is, just a minute, 10,750 minus 2,800 plus 4,995. So I'm getting the total retained earning closing balance as 12,945. All right. So in this, now there is a change, there is an increase, or if I need to calculate the difference between opening and closing, it's coming to 12,945 minus opening balance, that's 10,750. So if you minus this, it's coming to 2,195. So this is the addition in the total equity, that is 45,750, and you need to add this 2,195. So if you add this, it will come to 47,000, sorry, 945. So the total equity at the end of the year would be 47,945, and that's the reason C would be my correct option. I hope you all understood the question. The question is about total equity. That's the reason I'm adding the difference in my total equity which was given in the question. Alright, let's move ahead with the next question. That is, a treasurer of a sports club provided the following information. Alright, so this balance sheet information they have given, and the question is, what was the amount of accumulated fund? So whenever I talk about accumulated fund, understand over here the accumulated fund is nothing but it's capital which they are talking about. So let's calculate the capital. It's very easy. Let's make a rough balance sheet, and in that the difference amount would be my capital. So here you go. So as you all can see, this is my rough balance sheet. The debit side would be my assets and credit side would be my liabilities. All right. So over here, the first one they are talking about is clubhouse and sports field. So this is nothing but I can call it as a non-current asset. So non-current asset, it's always recorded on the asset side. So 2,50,000 over here. So for our understanding, non-current assets, I'm just writing sports equipment. Sports equipment, it's again an asset, that is over here only I'll have to record 80,000. Third one is cash at bank. Cash at bank, again a current asset, so I'm recording on the debit side of my balance sheet. That's under asset column. Next is bank loan. So bank loan is always a liability, so I'm recording it under liability section. Bank loan is how much? 14,000. Okay. Next is subscription accrued. Subscription accrued is nothing but your an accrued income. So accrued income is always a asset, that is it's recorded under current asset under other receivable. So 2,800 I'm recording over here. So let's calculate the balancing figure. So if you total this amount, it will come to 2,50,000 plus 80,000 plus 12,000 plus 2,800. This will give you 3,44,800 minus 14,000. So the answer is 3,30,000. The difference amount is 3,30,800. So this is nothing but my accumulated fund. So 3,30,000. Yes, C is the right answer in this case. So again an easy question. Just we have to calculate the balancing figure. Alright, let's move ahead to the next question. That is question number 26. What will be included in the receipts and payment account of a social club? Okay, so just understand receipt and payment is nothing but they are talking about their cash book. Okay, so it's from the chapter that is incomplete. Sorry, it's from the chapter clubs and society. So let's understand this question. Cash payment for a new furniture for the club. Yes, you're paying the cash, so cash is going out. So you have, this will obviously be recorded. Depreciation charged on the clubhouse furniture. See, again, depreciation is always a non-cash expenditure, so it will never affect your cash. So this will not come. Third one, outstanding subscription from the previous year received in the current year. Yes, this will obviously come because you are receiving cash in that particular year. No matter it is for previous year or whichever year. If you are receiving, you will have to record it in your receipts and payment. Last option, subscription owed by the members at the end of the current year. So subscription owed, so that's nothing but it's an accrued income, so you are not receiving any cash. So this fourth transaction or fourth option will not be recorded in your receipt and payment. So the correct option would be 1 and 3, 1 and 3, so over here. So B is my correct answer for this. All right, students, you all understood this, I believe. You all understood why it's B. All right. Now let's move ahead with the next question. That is question number 27. Tato is a manufacturer. His manufacturing account for the year ended 31st December. Okay, showed that the work in progress had increased. Okay, so always remember work in progress. So work in progress is nothing but you all record. There are over here. This is a question from manufacturing account. So over here, okay, just understand one thing over here. Again, an easy question. The question is work in progress had increased. So work in progress, it's nothing but my closing stock. So always remember work in progress has increased. That means somewhere down the line my cost of production has decreased. All right, because work in progress of 31st December, they are talking about closing inventory at of work in progress as on 31st December. So if closing inventory is increasing, that means my cost of production will decrease, and if my cost of production is decreasing, my cost of sales will also decrease. So hence the right option would be A. Just for your understanding, just understand we have three types of closing inventory in manufacturing account. That would be, yes, first one would be raw material, second would be work in progress, and the third would be finished goods. So we have three closing inventory and this becomes the opening inventory. So okay, raw material directly affects your prime cost. Work in progress affects your cost of production. So here in the question they are asking about work in progress. That's the reason if the closing inventory is more, that means my cost of production would be less. So hence cost of production is decreased and cost of sales would be decreased. And finish inventory, this affects your cost of sales. Remember this thing. Moving ahead with the next question, question number 28. A factory makes uniform for school children. What is not included in the calculation of prime cost? Okay, in the factory manufacturing account. Okay, again a question from manufacturing account. Let's see the options. Cost of the cloth used to make the uniforms. Okay, so this is nothing but this is a raw material for me. So in prime cost, it is obviously included. So let's move to the next option. Delivery cost of bringing the cloth to the factory. Again, this is included. So it's included in the prime cost. Third one, wages of the driver who delivers the completed uniform to the shop. Okay, this is not included in your prime cost, because this is they are talking about finished goods. This they are talking about carriage outward. So carriage outward is never recorded in a prime cost. The last option, wages of the sewing machinist who makes the uniform. So obviously this is recorded. They are talking about direct labor over here. So A, B, D are included in your prime cost. The correct answer would be option number C. Why? Because it is talking about the finished goods. Always remember, in prime cost we record three things. That is, the first thing would be, prime cost is nothing but they are direct kharcha for your material, for your product. So first would be raw material, second would be direct labor, and the third would be direct expenses. First is direct raw material, direct labor, direct expenses. So anything related to these three things will affect your prime cost. Okay, so here the third option, it's talking about a finished good. So that's the reason it will not affect your prime cost. Alright, so C is the right option in this case. Okay, let's see now the question number 29. They are talking about the average inventory of a business was 40,000. Okay, the rate of inventory turnover was 5 times a year. Okay, markup was 20%. They have asked you to calculate the revenue for the year. Okay, so we need few informations over here. Some calculation would be required. So first of all, in this case, you all need to know what was the cost. All right, so over here they have given us inventory turnover. So, so first of all, we need to calculate the cost of sales in order to proceed further. So they have given us rate of inventory turnover. So, so what's the formula for rate of inventory turnover? It's rate of, it's nothing but cost of sales divided by divided by average inventory. So they have given us rate of inventory turnover as 5 times, and the average inventory is 40,000. So by replacing this or substituting this, we can understand the cost of sales. So this is 5, cost of sales would be X, and average inventory is 40,000. So 5 times into 40,000 will give me my cost of sales. So this will come to, COS is coming to 2 lakhs. Alright, so I got my COS. Now they are saying markup was 20%. Now just understand this thing over here between markup and margin. Here they have given us markup. So markup is nothing but my gross profit, the percentage of gross profit over my cost of sales. So in this case, uh, revenue is what we have to find out. Revenue minus cost of sales will give you gross profit. Now they have given us markup as 20%. So that means this is 20% of cost. So this would be 100. So automatically my revenue would be 120%. And just now I calculated my cost of sales. This cost of sales is how much? 2 lakhs. So if cost of sales is 2 lakh and they have asked us to calculate revenue. So just do a simple cross multiplication, that is 2 lakh into 120 divided by 100. You will get your revenue as 2,40,000. So this part would be coming as 2,40,000, and that's what they wanted. So my correct answer would be 2,40,000, which is option number C. I hope class you all are understanding, students, how I'm getting 2,40,000. Okay, so very important question, markup margin. Don't it's easy, just understand these three steps. And if they would have asked us calculate gross profit, it would be 40,000. So remember these things. Moving ahead with the next question, that is question number 30. Okay, so the question is, Shelley does not maintain a full set of accounting record but was able to provide the following information. Okay, so few information is given. The question is, how much was owed by the trade receivable on 1st September 2022. Alright, so this is a question from incomplete records. So just understand always this type of question somewhere down like just record the or just write down the opening and closing balance. So over here, opening and closing date, financial year. So this is 1st September 2022 and my closing date would be 31st August 2023. So this is my opening and closing. So they want us to calculate the opening balance of my trade receivable. So for this I have just drawn this. Always I would recommend draw a rough trade receivable account. So in this thing they have spoken about sales for the year ended was as on 31st August was 97,500, out of which 80% was credit. Okay, so I am doing a sale, total sale, it includes cash sales also, so 80% is credit. So 97,500 into 80% will give you 78,000. So what's the journal entry whenever I'm doing a credit sales? It's trade receivable account debit to credit sales. So trade receivables have been debited. That's the reason trade receivables debit side I'm writing 78,000. From where I'm getting 78,000? It is 97,500. 80% of 97,500. So by this I'm getting a credit sales of that year as 78,000. Next is amount received from trade receivable. So whenever you are receiving any amount, that decreases your trade receivable. So what is the journal entry? Bank account debit to trade receivable. So trade receivable has been credited by 71,500. So I am writing on the credit side. Okay, and last one, amount owing by trade receivable as on 31st August. So this is nothing but this is the money which they have to pay. So this is the opening balance of the next year. Okay, so as you all know, 14,000, this will have a debit balance next year, in the next year. So that's the reason this would be my opening balance. Balance brought down would be over here. Hence current year mein this would be recorded on the credit side. So technically this is nothing but my debit balance. So the question is, what is the how much was owed on the 1st September 2022? So now that's easy. Just we have to take a balancing figure of my debit and credit, and that would be my opening balance. So if you all can see over here, my credit side is more, that is 85,500, and my debit side is 78,000. So 85,500 minus 78,000 will give you 7,500. So this is my balancing figure, and this would be my balance brought down. So the right option would be option number B would be my right answer. Okay, so the next question is question number 31. When provided the following information: non-current asset, current liability, profit for the year given. Okay, what is the return on capital employed? All right, so the question is about return on capital. So what's the formula for ROCE? It's nothing but profit for the year, profit for the year divided by capital employed. So in our case, they have given us the profit, but they haven't given the capital employed. So it's easy. So how we can calculate the capital employed in this case? It would be my total assets minus my current liabilities. What all things are included in your capital employed? The entire capital plus my non-current liabilities. So here we can calculate that easily. So total asset is how much? 1,35,000. So 1,35,000 minus your current liabilities, because total assets includes the entire assets. We have to minus the current liabilities, that is 15,000. 15,000 if we minus, the answer would be 1,20,000. So my total capital employed would be 1,20,000. So this ROC is nothing but the percentage. They are asking you to calculate the profit percentage of your total capital which was employed. So the more the percent, it's better for the business. So the profit which was made, it is 23,000 divided by the entire capital employed, that is 1,20,000, multiply by 100, because we want the answer in percentage. So if you do this, it will somewhere come as 19 point 23,000 divided. Yeah, it is coming as 19.1666. So can I say this as 19.17? So the correct answer is 19.17%. Alright class, any doubt in this? Easy question. Okay, let's move ahead with the next question. The payable turnover of a business is 36 days. Okay, so what do this 36 days represent? Alright, again an easy question. So what do you mean by trade payable turnover? You take 35 days. The average number of days is 35 in order to pay your trade payable. So trade payables are nothing but they are the people, they are the suppliers from whom you have taken goods on credit. Now, first option is the average number of days before the business purchases further goods on credit. No, this is not the right one. The average number of days taken by the business to pay its credit supplier. Yes, this is what I was talking about. Let's also see the C and D one. The average number of days the business is allowed by credit supplier to pay for goods. The average number of days the business is allowed by credit supplier to pay for goods. Okay. The D1, the average number of days the business takes to sell the goods purchased on credit. No. C and D again is eliminated, because the D option is talking about selling the goods. So this is again nowhere related to trade payable. And C1 again is not the right one. So the correct option would be option number B. Alright, let's move ahead with the next question. Question number 33. Paul's gross margin has increased from 16.5% in year 1 to 17.5% in year 2. What would explain the improvement in the gross margin? So gross margin is nothing but my gross profit. They are talking about gross profit over here. Gross profit. So the first option is quantity of goods sold. Okay. Second option, increasing the selling price of the goods sold. Alright. Third one, offering trade discount to customer, buying in bulk. Offering trade discount to customers, buying in bulk. Okay. Selling goods at a reduced price. So see class, over here, C and D is will not increase your gross profit margin. If you're giving a trade discount, so this will decrease your gross margin. And again, D option is selling goods at a reduced price. This will again decrease your gross profit margin. So C and D is eliminated. Option B is the correct one over here, increasing the selling price of a good sold. So if you are increasing the selling price, that means your revenue will increase, right? If your revenue is increasing, your gross profit indirectly will increase. So B is the most right answer over here. A option, increasing the quantity of goods sold. So see, if you are increasing the quantity of goods sold, even your cost will increase. So if both are increasing in the equal proportion, it will technically your gross profit would be not having any impact. So the right answer would be B in this case. All right. All right, class. Let's see question number 34. M Limited has made sure that its financial statement are comparable with those of previous years. Okay. How does this affect interested parties? Okay. They are made aware of any changes in accounting policies. Okay. They can be sure that the information is in the financial statement is up to date. Okay, this is I don't think this is the right answer. C1, they can understand the financial statement easily. No, they are talking about comparable comparison between 2 years. They know that there is no significant errors in the financial statement. No, comparable doesn't mean that there is no errors in the financial statement. So the right answer is option number A, because they are made aware of any changes in accounting policy. So what do I mean by this? See, in year one, if they are taking like if there was any changes in terms of depreciation, so suppose they change their depreciation from SLM to reducing balance method, so they are made aware. So that's the reason I guess A is the right answer. Okay, so see, first of all, businesses are not allowed to change any matlab, if they are following depreciation through SLM directly, they cannot change until and unless valid reason. So if they are doing so, they have to be, the shareholders or stakeholders needs to be made aware, even if they are changing their valuation of closing inventories. So from FIFO they are going to weighted average method. So these all things needs to be informed to the stakeholders. So that's the reason A is the right option over here. Okay, so the last question is, which accounting principles states that profit should be recognized when title to the goods passes to the customer? So in this case, they are talking about, simply this is a direct question. So this they are talking about realization. Okay, so here realization, you cannot record anything until and unless the title is transferred or passed to the other customer. Until and if it's a sale or return basis, in that case we have to wait for a confirmation from the customer. So in this case, the direct answer is option number D. Material, money measurement, prudence. This they are not talking in this is nothing related to uh, realization over here. So the right answer is D. Thank you, class. I hope you all enjoyed this past paper solving. We completed all the 35 questions from the past paper of October November 2024. Thank you and have a great day. All the best.